about we're going to start talking about market outlook for 2026, okay? So I'm going to kind of just segue in it a little bit, and I want you to just start talking, and then we'll have some, we'll create the hopefully the hook at that point, right? So,
Yeah.
the Fed, the president's going to put a new Fed chairman in. There,
Hmm.
he's really optimistic about low rates. The president
Right.
said it more than once: low rates, no low Fed rate, low mortgage rates. He's really looking at it. He's got a new chairman for Fannie Mae as well. Great
Right.
signs coming from the mortgage side. What do you see happening for 2026 with regards to homeowners and home buyers?
Yeah. So what I see for 2026, being in the trenches every day, I really see that the market seems to be picking up. I see a sense of relief that the world's not going to end and we are heading into a more favorable environment for buyers and sellers. I think the big key this year is hopefully we see more inventory across all markets, but sellers that are actually selling, I think this year are going to finally be more realistic. And they've had a year to 2 years of not calling all the shots with the buyers, which, as you know, for the last 10 years plus, sellers called all the shots, and the buyers at some point were lucky to get their offer accepted after 5 or 7 offers. So,
Right.
I think those days are over. Obviously, realistic sellers coming into the market that need to sell, that want to sell or have to sell, are going to really drive more sales this year, I think, than we've seen the last 2 years, in my opinion.
There's a lot of equity rich homeowners.
Yep.
Many of them have limited or fixed income. And unfortunately, the
Right.
cost of living is still increasing. So many equity rich homeowners have a low mortgage rate, but potentially carrying a lot of personal unsecured debt that are in the double digit interest rate range. By
Right.
selling and moving to an appropriate, to a right size house, will allow them to consolidate those bills into their new mortgage on the new property
Right.
with a significant down payment to help them get a low interest rate.
Right.
Um,
So they end up in a new house, maybe in a new area, no debt, mortgage debt. Yes, small payment with a large down payment, but it really helps their overall financial picture, whether they're moving into retirement or going from working full time to part time or wanting to be near the kids or the grandkids. So I think we will see a lot more sellers come into the market trying to free up that equity in a way that they can't really do otherwise. So,
we've seen a lot of buyers want to purchase, but they've been very cautious about their monthly expense and their out of pocket to purchase the property.
right.
Tricks like the 2-1 buy down or even a permanent rate buy down have been something that we've used over the last handful of years to keep the market moving. Do you see that these opportunities to negotiate a lower interest rate paid for by the seller still presenting themselves in 2026?
Absolutely. I do see that, especially with builders. Whether if you're in an area that has a lot of new construction around the country, there are different areas. San Diego's not quite one of them,
Right.
but places like Boise, Idaho, there's new construction everywhere, and I'm seeing builders still offer some upwards of 20 to 40,000 for rate buy downs, closing costs, instead of reducing their price, which ultimately, as you know, a lower interest rate over 30 years, 20, 30 years offsets a $20,000 price reduction on a house. So
Yep.
I think smart sellers on the resale side, if they have good advisors like myself and you, a team advising them that to get your home sold, let's present a rate to a buyer that is attractive to them in the long term, because people are payment conscious, right? So uh, I think
Yep.
that'll help.
Don Connolly, one of our old branch managers, still stuck in my head today. You don't
Yeah,
live in the price, you live in the payment.
right.
And if we can help create an affordable payment for home buyers, they'll figure out how to buy the property. And
Correct.
we see this, every day that, you wake up every month, you wake up, you say, what do I got to do today? I got to make my mortgage payment. So
Right.
if we can make that mortgage payment attractive and acceptable, we're
Yeah,
onto something. Um,
exactly.
so, how are you helping home buyers, manage the ups and downs with regards to interest rates? How are you assisting them with regards to these properties moving so quickly? On Monday night, they find a great property. They got to work. They got to get their schedule organized, and then eventually go
Right.
see the property on Friday, and then next thing you know, the property's gone.
Yeah.
How are you helping manage, these ups and downs that buyers are going through today?
Yeah, I think the key is preparation and really having them, prepared with a full loan approval through the lender, right? If I refer a buyer to you, we get a full loan approval, not just a pre-approval letter that, a realtor asks the lender to draw up at 8 p.m. because the buyer wants to make an offer.
Yeah.
But in order to sell your offer to the listing agent properly, I've always prided myself on going in with a full loan approval, Fannie or Freddie approval, show them the conditions, the listing side, especially if it's a hot property, because the old rule, right? Is the minute your buyer is interested in a property, wants to make an offer, all of a sudden there's another offer too, even
Totally.
even if the property's been sitting for like 40 or 60 days.
Right, right.
So, I tell my buyers, you have to get pre-approved, like know everything up one side and down the other as far as your payment, your property taxes, your interest, your homeowner's insurance. That's another thing, is make sure you can get insurance on a property. That's becoming a little more of a challenge, and
Absolutely.
a big expense added to their monthly mortgage, when it used to just be kind of an afterthought. So
You're totally right.
preparation's the key. Yeah.
Yeah.
And the fire insurance thing,
Oh,
people are shocked and like, oh, my policy is going to be 700 or 800 a year. You're like, nope, maybe 1,400 to 3,000 in certain areas. So
yeah, you're totally right. I like to say, although sellers today want to negotiate and they
right.
want to sell their property, it's
Hmm.
still a selfish sport for a seller. What's in it for me? How
Right.
much money am I going to get? How long is it going to take for me to get my money? And how
Right.
much drama is this buyer going to bring to me?
Right.
And I, as a
And
lender,
are they going to follow through and close? Right.
yeah,
Are they
exactly.
going to perform?
Yep, yep,
That's
exactly.
key.
So as a lender, I can remove two of those three variables, right?
Right.
How much drama is it going to be? Let's get that resolved now. Let's do that upfront underwriter approval. So
Right.
as you said, if we're a conventional buyer, an FHA, VA, or even a jumbo buyer, let me
Right.
get you an upfront underwriter approval. So we're past the pre-approval stage, right? So how much drama is it going to be? We're solved. Loan's already approved, right?
Hmm.
And then how much time is it going to take to get this loan done? How fast can I get my money, as the sellers are asking?
Right.
Well, if you're underwriter approved, all at that point we need is insurance and an appraisal with escrow and title, and we're off
Right.
to the races.
Yeah.
So, as you said, California fair plan insurance can be shocking sometimes. So we,
Hmm.
as we're underwriting the loan and pre-approving or underwriter approving,
Right.
we're also including that conversation to get connected with the right insurance agent. So
Exactly.
so as I'm writing, as I'm preparing numbers to help the client understand the opportunity on a certain address,
Hmm.
we're also including the insurance agent to get a updated rate quote for
Right.
insurance, to make sure that that budget is acceptable for the buyers.
Right. And I think that, the key, a lot of real estate agents don't realize, whether they're representing a seller or a buyer, the lender is probably the second biggest key, aside from the buyer and seller agreeing on terms, to completing the deal and performing throughout. Because if you're on the listing agent side and I receive an offer from a lender, such as yourself, that has a full approval, I can explain it clearly. Sometimes sellers might pick that certainty over a cash buyer that's kind of wishy-washy, and you'd rather have certainty in the deal for a seller. And then as the buyer's agent, if I can present that offer and create that certainty in the listing agent because of my lender partnership, and the fact that they see how prepared I am to come in and how much the buyers want this property, then a lot of times I win over cash deals, honestly, which is, again, the key is the lender and having the buyers ready to roll with that situation. So,
You're sharing a lot here, Robert, right? So you're not just, pulling listings from the MLS and opening doors for buyers, right? You're
right.
you're you're presenting a strategy, a planned and
Exactly.
prepared strategy,
Right.
because families rely on you, right? That
Right.
they're giving 30 days notice to their landlord. They're moving a significant amount of money around to
Yeah.
purchase this property.
Yep.
And there's a lot of emotion and
Yeah.
dreams and goals
Emotions.
that are
Right.
falling in play
Right.
to this new home that they simply just wrote an offer on. And
Right.
so if you're going in with a soft offer and you get bid out multiple times, the buyers are going to lose a lot of faith in the agent and also
Right.
in
Yeah.
in their goals.
Yeah. And in certain circumstances, there's nothing the agent can do, right? If you're competing with escalating cash offers, your buyer might lose out. But a lot of times as I've coached or managed or, represented clients, and they've come to me and said, well, we've lost out on 4 or 5 offers. I'm like, it's a realtor problem. It's usually the buyer's agent not selling that story or presenting a complete package to really give their buyer, who's very emotional, who has given notice or is making the biggest purchase of their life, unless they go and move up and buy something bigger later.
Right.
They're and that's the market I think we're in now, is the advisors, as far as the lender, banker, partner, the realtor matters more than ever in this market, and where we're heading compared to the days when you could fog a mirror and get a deal accepted.
Right.
It's really crucial who your team is. So
I think one thing that we chatted about before is that it is a skills-based market,
oh, that's great.
not
Yeah.
just a door opening market,
Right.
and tell me more about the skills you're seeing as a listing agent. What skills the buyer's agents are coming to the table with that help you feel confident in that offer you're receiving, or what skills do you think you have that um, buyers today really need to move their family forward?
Yeah, on the listing agent side, when I receive an offer from a buyer's agent and the buyer, I'm really looking for lack of a better term, do they have their shit together, right? Are they presenting a complete package that's going to allow me to advise my seller that, hey, nothing's guaranteed. There's no, guarantee we're going to get to closing or past contingencies. But with my experience, or a good agent's experience, you can sniff out any problems early, realize that these people do have their what together and do want the home, and have presented a clean package that eliminates a lot of question marks from the seller's mind, which, I'm in the business of making my sellers comfortable, keeping them out of any drama. you know One of my strengths has been being uber patient, right? Like, a lot of times after we close, I tell the seller some crazy stories of stuff that happened. They're like, why didn't you tell us? And I'm like, well, because it wouldn't have done anything for anybody to tell you now. I just worked through it. And that's what you pay me for, is to get you to the finish line in the most certain way with the least amount of drama to get you your money. So I think, back to your original question, looking at certainty from a buyer's agent and their lender and the package they present, that's the difference in making a deal run smooth from beginning to end. And other deals that just continually, listings that fall out 3 or 4 or 5 times, there's usually another issue besides the property, right? So,
Right. Yeah, I agree. What I see is that buyers find the right property on a Friday night,
oh
and
yeah,
then we're
exactly.
scrambling, right? Hey,
Yeah,
can we get in there Saturday morning at 9 a.m.
yeah.
for our first showing? Can we get that
Hmm.
pre-approval? We're trying to type up a letter
Right.
tonight,
Yeah.
and
And
I
and
love to
and
be ready.
yeah, people are texting you, "Hey, Mike, did you bring your laptop to your kid's soccer game or football game? Or, can you shoot me a pre-approval letter?" I mean, that I think this market and this, I mean, look, we've been on a crazy run in real estate, right? Like, things I never, after almost 40 years in this business, there's things I would have bet my life on. We would have never seen, right? Like the
Yeah,
crash in '08, right? That
yeah,
just, nobody foresaw that. And then what happened during the pandemic and the crazy meteoric rise of values,
yeah,
and 5 or 10 offers and people outbidding, and to now, like, we're just in this like really like spiky market. I look forward to the old days when it just used to be this rolling,
yeah.
up and down, and little ups and little downs. Like, you've got to be ready, all hands on deck for the crazy stuff that comes our way in this business, right?
Absolutely. And so, efficiency is how
Hmm.
we prepare ourselves and having a good plan helps us be
Right.
ready for the spikes, right?
Right.
As a home buyer today, right now we may think that, the market's stable. We've seen great appreciation. We've seen consistent appreciation in
Hmm.
2025. And as we're stepping into 2026, some buyers may be coming into 2026 thinking casually that it was similar or will be similar to 2025. But
Right.
what we're seeing is that we have a president that's going to put a new Fed chairman in, and
Hmm.
that new Fed chairman is going to think about low
Hyper,
rates,
hyper growth. Yeah.
hyper growth, right? And
Right.
so we don't know what's going to happen here in 2026. We just know that it's happening, right? And so
Right.
we are our boots are strapped. We're going to ride this wave, but we need to be ready and efficient to pivot appropriately. So as
Right.
our clients are moving forward towards preparing to purchase a home, we want to
Hmm.
ask them to start early on the loan process so we can just be ready for anything.
Correct.
But
Right.
whether that is to, this Friday night writing an offer or
Right.
writing an offer 3 months from now, at least we're ready and we can keep the stress level low for the clients and
Right.
still be ready to move forward at an instant's notice. Uh,
Right.
one
Especially with the
conversation,
lack of inventory, real quick with that,
yeah,
the lack of inventory, and we've both seen the reports, right, of the last year or two, like sellers are pulling their properties off the market if they don't get the price. We haven't seen the inventory spike like we expected,
true,
but like you said, Friday night at 9 o'clock, some agent puts a listing on the market, right, and it's in the neighborhood and it's got the backyard they want, and all of a sudden they go, I want to check this out and write an offer at 9 a.m. tomorrow.
yeah.
Preparation is the key because you never know when that moment's going to hit, especially in residential real estate because it's so emotional.
Yep, yep,
Yeah.
exactly. Many buyers today are very specific. I want
Right.
92007. I want
Right.
Cardiff. I want 3 bedroom, small
Yep.
yard, big yard, doesn't matter. But
Right.
this is the price.
Right.
And that when the opportunity presents itself and you're not ready,
Hmm.
there's going to be 5 buyers that'll have their offer presented to the sellers by the time you finally apply online.
Right.
So we want to be ready. We want to move quickly. You
Yep.
know, one conversation I've been having in the last
Hmm.
couple of days are with business owners. They're
Okay.
preparing. They want to buy in 2026. They're talking to their financial advisor. They're talking to their
Hmm.
tax guy, saying, "Okay, let's get our taxes ready. Let's start this process so we can get everything ready for the lender."
Right.
And as a lender, I'm being included in these conversations and conference calls with the CPA, saying,
Hmm.
"Okay, what do I need to declare on my taxes to get my mortgage approved?"
Right.
And so as I'm talking to the clients about
Right.
the net income that they have to declare as a business owner and entrepreneur to
Right.
get that mortgage approved,
Yep.
their jaws are dropping about the
Yeah.
income taxes that they have, that the check they have to write to the IRS to make it happen.
Right. Yeah. And then, right. And then or the debt they need to pay off, or I
Yeah,
mean, that's why I say, like, I'm not just saying that because I'm on a podcast here with a lender, a buddy of mine for 10 years plus. You're the key. If realtors wonder why they're not successful buyers agents, like you're you're the key, the lender, because you prepare and analyze, look at their debt, their car payments, like you said, the taxes, right? Like, did they have a home-based business, right? You've seen this one that they last 2 years they wrote off 10,000 in home-based business expenses, and they didn't even know that affects their mortgage qualification, right?
right.
So getting all that out front, like, can help them be successful when they fall in love with the house that comes on the market at 10 p.m. on Friday night.
Exactly. Or
Yeah.
or if they do plan ahead, they know what down payment amount they need to present to
Right.
get that loan approved.
Right.
But one of the conversations I've been having is
Hmm.
to throw the tax returns out of the equation for
Okay.
an entrepreneur, because I just had this conversation yesterday
Hmm.
where the tax advisor says, "Okay, Mike, if we have to declare this much money for our business owners mortgage,
Right.
they have to write a check for $70,000
Yeah.
a year more to the IRS to
Right.
get that loan approved."
Hmm.
And so that's, and most jumbo mortgages require 2 years tax returns. So that's
Right.
almost $140,000 more the client has to pay to the IRS.
Right.
If we use the bank statement loan program, we completely ignore tax returns.
Right.
And in today's lending environment, the interest rate consequence is probably like 0.2 or 0.3%
Wow.
consequence for
Yeah.
ignoring tax returns.
That's not
So,
going to equal $140,000
yeah,
check to the IRS, right? And
yeah,
it gets them into the home. So is that a 12-month now bank statement loan or 24?
it's a 12-month
12
business or
months.
personal bank statement mortgage.
Wow.
We can approve this type of loan by using 12 months bank statements where
Okay.
we total up all the deposits and that's your income. We
Okay.
could also collect last year's 1099. So if you're getting a 1099 as an independent contractor, we can
Right.
simply just use the 1099. But
Okay.
as we're doing this loan, the interest rate consequence could, on a monthly basis, is probably just a few $100s a month consequence.
Wow. That's
In
not, yeah.
Yeah, so in lieu of a big check to the IRS for income taxes, we're just making a little bit higher mortgage payment instead.
Right. No, that's brilliant. And I think a lot of those products, like you said, the buy downs, I've had a couple clients listings where I've seen the buyer's agent come in with a 7 or 10 year interest only again from a buyer
Yep.
because they want to keep the payment low and they know they're getting the property at a great price that maybe it was 10 or 20% lower than it was 3 years ago in certain markets. So those kind of products are very important in markets where you have to really strategize to get someone into the property and make a sound financial decision for them, right? Like you and I have never been about pushing risky products on people or saying go qualify and try to max out your purchase price and your loan amount. But there's vehicles to use that are smart financially. So that's the benefit of having seasoned advisors like myself and you.
Yeah, the interest only mortgage has come back uh, aggressively. And we haven't really seen a lot of it in the earlier years, but in the second half of 2025, not only did we have a 30-year fixed interest only, but
Right.
we had a 40-year
Oh wow.
fixed interest only. And then
Mm-hmm.
as those products have been proving themselves, we've been also seeing the return of the 7-year arm.
Right.
So what that tells me a few things. One, Wall Street and the stock market and investors are having a higher level of confidence in the
Confidence.
real estate
Right.
market and the
Mm-hmm.
ability of homeowners to repay back their debt. And
Correct.
most of these buyers that are using the interest only feature, they're typically putting 20 to 30% down payment. So these are
That's
not low down payment buyers
exactly
getting an
right.
interest only mortgage.
Right. That's
Um,
what I did my whole career. I've been self-employed since I was 18, and almost every property I purchased was a 7 or 10 interest only arm because I was having to put back in the day self-employed 25% down. So I
yep.
had the equity, and if you're figuring conservative appreciation of 4% in markets, or Southern Cal, right? You've
Yep.
got crazy swings of 10 to 20%. You're pretty safe, right? You're not, because people used to say to me like, "Oh, why are you doing these risky loans?" I'm like, "There's no risk. Like I put down 250,000. I have enough equity,
Yeah.
but running my own business, I need the lower overhead to continue to go make money
Right.
in my business and not be strapped, in case you have, ups and downs in your cash flow if you're a business owner." So that's awesome that you advise people that to look at those things and have those products to offer. It's important.
It really is. And, business owners need flexibility. And so
Right.
it's not that they're irresponsible and just want a minimum payment.
Right.
Business owners typically are paying themselves a small salary. And then, every quarter they're giving themselves some type of bonus or
Right.
of some sort. So,
Dividend at the end of the year dividend. Yeah.
yeah, precisely. So on an interest only loan, your monthly payment is simple interest. The more you pay down your balance, the lower your payment goes. So if you're
Right.
using your base pay for the first couple of months, interest only,
Mm-hmm.
off of your small salary, great. And then when you get your bonus check, you're applying $10,000 or $20,000 extra to your mortgage balance. The
Right.
following month, your payment's going to be lower
Right.
because you just reduced your balance. So there's some
Right.
instant gratification in using an interest only mortgage.
Yeah.
Um, Robert, you actually sold me a rental property.
Right.
You know, uh, and it's turned out well. Thank you very much.
You're welcome.
I consider my family a successful landlord at this point.
That's awesome.
It started with you,
Yeah.
in finding the right property.
Yeah.
Um,
With the
and
potential, and you guys kind of heeded my advice, or with my experience. Like, I think that's one thing I bring to the table. It doesn't matter how long you've been in this business, really. Like, it could be 3 years or 37 years. That it's the experience, or the eye, or the feel, or the, like, you're either natural at seeing opportunity, right? Whether you're selling vintage cars or homes. I mean, and I think that's one key I've seen, is like, through all my years, is I've been very successful at helping my clients invest in the right areas, the right locations, but for the potential, if they are willing to take a little risk, the reward will be great. Like, you guys, bought that property in Boise, and it had all kinds of potential, right? It was big, and you had to do some things to it and put some money in it. But I think that return has been exponentially greater than your initial investment, I would assume. So
yeah, I think it's market knowledge, right? I think
it's exactly
you're in the trenches, so you're seeing the growth opportunities into where, whether it's a government issued opportunity zone or just an area
hmm
that's kind of aging out, like the residents are aging out, so that
right.
it's time for the young blood to come in and
Yeah,
move in and
right.
raise a family. Um,
Remodel and raise their family. Yeah.
so, I'm talking to homeowners
hmm
on a regular basis, and they're saving money, they're making money, they're saving money, and they want to invest in real estate, but sometimes their finances is respectfully like a shit show. Whether it's
Right.
they haven't filed their taxes yet, or they have too many cars on their credit report, or whatever the circumstance might be.
Not enough reserves. Yeah.
Yeah, so one thing that we've been utilizing lately is called a DSCR loan, debt
Okay.
service coverage ratio. It's an old school commercial real estate loan that we're starting to
Right.
use in the residential side. As long as the mortgage payment equals the rental income, the loan's approved.
Wow.
Now,
And
in
that's great.
San Diego, that might mean you need a good sized down payment.
800,000 down.
Yeah, but other sectors of
Right.
California or across the country, all you need
Right.
is a 20 or 25% down payment to
Right.
cash flow the property with these, reasonable, DSCR mortgages. Um,
Yeah.
so hey guys out there, if you're an investor, you're thinking about investing in real estate, it's not that hard these days. There's lots of opportunities
And lots of, yeah, lots of
for
areas, lots
lots
of
of
areas that
areas,
you
like Robert.
service, right? You
Robert
service
knows the
multiple
areas.
states.
He researches these states and these areas, and we
Right.
have the solutions to, these no tax return, no pay stub solutions that will give you reasonable interest rates. All right,
Yeah.
Robert, I got one more for you. I want to
Okay.
throw a controversial topic
Let's
at you.
see. Uh-oh. I better
Okay.
get some water. I better get some water for this one. You know me, I don't shy away from controversy in the real estate arena.
So we've had this big NAR settlement.
Oh yeah. That's
We're over a
one of my favorite
year.
topics here.
Yeah, we're over a year since the settlement.
Right.
I think a lot of agents thinks it's business as usual now with regards to buyer's agent commissions.
Right.
Now that we're a year past the settlement, we're working through it, we're working with it now.
hmm
What's your take on buyer's agent commissions and buyer representation?
Yeah. So this that was August of 24, I think that passed. So we're a good year and a half now into this. So when it happened, it's funny, I still use this in some of my marketing to my clients, or some of the videos I'm doing. I'm still smiling because of this change, because I predicted this. My dad said this was going to happen 25 years ago, that the guaranteed buyer's commission was going to go away in the MLS. And it to me, it solidified the professionalism of this industry. It washed out a lot of people that just were in this for the easy dollar, weren't doing it as a true business. Like you said, or when we started this, just opening doors and not advising, or having the market knowledge to really advise someone properly on the biggest purchase in most of their life. So,
Right.
so a few things, I'll try to be brief. The last year and a half, I've seen people still complaining about the change, still complaining that they're not guaranteed a certain commission. And then I've seen other people embrace it, really go out, hone their skills, right? You just said this earlier. We're in a skills-based market now in real estate and even in lending. If you bring the skills to the table, you have the products and the knowledge, you should be successful. So it's sharpened the realtor skills that work with buyers. It's forced buyer agents to be more professional, to really dive deep into each individual property and offer, just to know whether they're in a power position making this offer and asking for their 2.5 or 3%, or if they're in a weaker buyer's agent position and there's multiple offers on a property that maybe is reduced or is a trust sale that's a steal, and a lot of people are after this property, then you might have to take less. But in the end, if you're running a true business as a buyer's agent or a realtor, it should all balance out. You're going to have your 3%, your 2.5s. Recently I got cut down on a buyer's agent deal where there were 5 offers and I had to take 1.5. My buyer wasn't willing to make up the extra 0.5%, but I've done 3 or 4 deals for that buyer in the last 15 years. So it's kind of a, give and take, right? I kind of liken it to like frequent flyer miles. If you do enough, if you fly enough on a certain airline, they're going to throw you a free round trip ticket. And it doesn't mean I'm not professional or I'm a discounter or I'm, working for free. I'm still making a good living at 1, 2, 3% of these purchase prices today. So I think in the end, it's been a great change for the market. I'm still smiling. I still laugh when I hear agents say this isn't fair and all this stuff. And it's forced agents too to work with their lender more, because with the credit from the seller to cover commissions and closing costs, if I take a little less on my buyer's agent commission and the seller's still willing to give that amount, I can transfer some of that over to the closing costs for the buyer. And you as the lender might be able to buy the rate down 1/8% or 1/4%, right? So it's opened up a lot of negotiating, forced professionalism. And I think ultimately the consumer does win in this case because it's flushed out a lot of people that maybe shouldn't have been in the business. And I, and like I said, I was a new agent once and a medium agent and a seasoned agent, and doesn't matter. I've seen some sharp agents. I've had to hone my skills because a lot of these realtors that are 35 now, they're smart, right? They get AI and tech, and they're bringing a whole nother realm to the real estate game. So my old butt has to sharpen his skills to stay in the game here.
Yeah, I get it. I get it.
Yeah.
What we've seen, because of this, I think on my lending side, with
Hmm.
regards to the NAR settlement, is that buyers are still getting great deals on real estate in real estate.
Right.
It's just not in the price. And so these real estate deals
Right.
they just look different. And so
It's exactly.
the buyers are now getting a great deal with the seller concession to pay the closing costs. They're getting a great deal
Pay
and
their
maybe
agent. Yeah.
a permanent rate buy down or a temporary rate buy down, or sometimes the sellers are going in and making really nice repairs to the property.
Right.
So and so you're not seeing these price discounts, but you're seeing great incentives that's
Right.
actually make a lot more long-term sense to receive the incentive than the lower
100%.
price.
Right. And in some markets, we're seeing both lower prices and incentives, right? Like certain places, I've got friends that compass all around the country in North Carolina, South Carolina. I have a team in Boise. I work in San Diego too. You have people all over the country. Certain markets have had to be really aggressive on the price reduction and the incentive. So if you're in that market, it's a great thing. Like I think it's all been good, and anyone who's lasted and still in the business in the last few years um, has had to sharpen their skills, and I think everyone's going to benefit as we slowly come up here with the new policies, rates. Hopefully affordability goes down, and people are able to purchase homes, and new programs come out because ultimately, I still believe in home ownership over renting. And I think it's a good long-term strategy if people are going to be in a place for 10 or 20 or 30 years, to own their own property instead of paying a landlord to
Yep.
build their wealth.
Agreed, man. Agreed.
Yeah.
Well,
You know,
Robert, man,
one thing you
yeah,
said earlier, I love this quote. You said the market didn't break, the playbook has just changed. So I think that's so key. The playbook has changed, and for me on the real estate side, whether I'm a listing agent or buyer's agent, the playbook for you has changed, right? Because you got new products, and we've been doing this so long, both of us, because we're adaptable, we learn, and I appreciate all the stuff you bring to the table, your passion, and working together with you across 3 brands now. We first met at Berkshire Hathaway, then
yep,
Sotheby's, now at Compass. So uh, yeah, let's keep kicking butt and taking names here into 2026 for all of our clients and our families.
right on, man. Well, I appreciate the chat,
Yeah,
Robert, as always. We're gonna
yeah,
have to
you
do
got
this
it.
again. We got a lot more to
Okay.
talk about.
Yeah, we got about 20 more controversial topics and things we could impart our knowledge on others. So I appreciate the time too. Thank you so much for asking me to be on here.
Yeah, you got it, brother. You talk to you real
Okay.
again.
Okay. All right. See
All
you,
right.
Mike.
All right, man.
Bye.
All right.